Family offices pay estate space to manage hundreds of properties. He charges per seat. His biggest customer pays $7,000 a month. He's up to $20,000 a month in total revenue, or $250,000 run rate. Just closed a 3.2 million seed round at a 17 million pre-money valuation. But it's really because of the traction he had before that with his agency, doing millions and millions a year in revenue, doing custom solutions for the same customers he's now serving today. That's why he's now scaling so quickly, and that's what allowed him to get the seed round done in a market that's crazy, where no one can get deals done. Team of 17 as he looks to scale. New version coming out here shortly. Hey, folks, my guest today is Jonathan Fishbeck. He is building estatespace.com. It's estate management simplified. Jonathan, you ready to take us to the top?
Always. Thank you, Nathan, for having me.
No one thinks about estate planning. How do you make them think about this so they pay you?
Yeah, so I think from an estate planning perspective, where estate space really is setting the bar is when we're dealing with real property assets. So we're talking about managing your property, maintaining your property, managing your assets and maintaining those assets, ultimately coming back to where we started as fintech, right? We want to help appreciate the value of the things that you own and help you manage them better. We want to add depth to your general ledger and your balance sheet, where it might just be a single line item. And then from there, we also want to help you slow down the depreciation of assets that might lose value over time, and helping you extend the life of things that you own. So ultimately, the way that when we started the company, we saw, I've got marketable securities, I have real estate and alternative investments, but who's really managing all my stuff? And that's how we really started. That was a genesis and the idea for Estate Space.
Mm-hmm. For me, when I think about managing my own sort of stuff, like I want a person that I can call focused on it. How do you get people to sort of trust this using to invest in software to run this process versus a wealth manager, for example?
Right. So it's an emerging space, right? In the last 10 years, family offices specifically have started getting into the fulfillment of the lifestyle of the individual that they're serving, whether it's a single or multifamily. And so we saw an opportunity to really help them with the things that they struggled on, like finding the right person to do the thing that they're looking for, or the request being that they need to fulfill. So we've actually had a lot of excitement around helping these families and family offices scale automatically through Estate Space.
So are they paying you directly versus individual consumers paying you directly to manage estates?
Yeah, so we're B2C to B. So yeah, exactly. So it may be
B to B2C.
Yes, exactly.
Yeah, interesting. Yep. So how many family offices pay you something today?
Right now, we've got about 65 family offices on the platform. When we launched, April 30th of this year.
Wait, why do I have that your launch date was 2017?
Well, that's when we started the company, but we launched our commercial product. So we did an alpha to a beta. We went through that process with our clients, and in order to get to a commercial ready product for both web and mobile this last April.
You had, though, revenue before this year, right?
Absolutely, yeah. So we were, as part of my Founder 500 story, right? We were doing services, so we were doing a lot of things. It was hard for me to break that service mindset, and we were able to really pivot to complete SaaS here in the last 18 months. Mm-hmm, so we've now kind of sunset our services, and now we're changing all of our revenue over from what was non-subscriptions to all subscription based.
I see. So yeah, when we spoke in 2021, you said you had about 50 customers and they were paying, I guess, services here as well, but you did about 2.2 million in total revenue that year. Is that accurate?
That is accurate. Yes.
I see. But 0% of that was SaaS.
Yeah, it was like, no, not 0%, but maybe 5% of that revenue was SaaS revenue. And so now we're flipping the script. So we pivoted to pure SaaS. We do no services at this point in time.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your Founder Path dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of Founder Path, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here, and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. So will revenue decline this year because you shut off all that service revenue while you're scaling your SaaS?
Yeah, so we're actually doing a seed round funding right now. So we're raising capital. I put in more capital. We're still bootstrapped, so we're doing this through friends, family, partners, our closed network, and our board, and then we're scaling back up. So we just crossed 250,000 in recurring revenue in ARR in the past 5 months since we launched.
So you're doing $20,000 a month in MRR, which is a $250,000 run rate, and that's your revenue for this year.
No, our revenue by the end of the year should probably be somewhere around 600,000. So
okay, so you still have 400 of services or something, 400K.
Yep.
I see. Okay.
Yep. So that's exactly. We've still got like annual legacy, just under $500,000 in ARR coming from services.
How do you manage that storyline, especially if you're raising now, even just with employees? I mean, imagine when you close books in 2021 and you do 2.2 million revenue, and then 2022 it's going to go down, significantly down to 600. But the story is, hey guys, we're moving to higher margin SaaS. That's a hard storyline to manage. I mean, any employee looking at the books is going, oh my gosh, we just declined by a lot. How do you manage that storyline?
Yeah, well, so I'm transparent and honest, right? So I've just told every employee kind of what we're doing, right? The same story I'm telling you right now. So we're raising around 3.25 million. That'll take us through the end of next year. We'll be about $2 million in ARR by the end of next year, and it'll all be SaaS. And so actually we have more excitement from our staff than we did. And we've also, it wasn't like I had to sell that to all 17 people that work with us now, right? At that point in time, we were only about 6 people. So it was just me and a few other people at that time. So we tripled in size here in the last 18 months now that we made that transition over to SaaS.
Interesting. How much equity do you think you'll have to sell at your current size to raise 3.2 million?
So I've already raised 2.4.
Okay. And what does that mean? That's committed, signed, wired?
Yeah, so it's closed and signed, closed off. We're at just under 2.1, and then we've got another 350K of soft commit at this point.
Okay, and when's the first close? When are you going to take the first wires, you think?
Already started doing it. So I've already got $2 million in the bank.
So then we don't have to speculate, right? So what valuation did you set, or cap if it's a note?
Yeah, so we did. We're doing pure equity sell, common stocks, and we set a $17 million pre-money.
Mm-hmm.
Yep. And
that's great.
Be somewhere around 21.7 posts by the time this is all said and done. And then we're positioning the company right now to put, we feel that based on the market comps, the business model, the cash that we've already raised, we support that, and that we're going to be adding significant value over the course of the next 12 to 18 months here as we potentially look to either do another round or as we talked last week, potentially doing something here with Founder Path.
Yeah. How do you get I mean, look, at your stage, the revenue is almost meaningless. It's really about, do they believe in you and your story, right? Which clearly they do, because you're raising this amount of money in a time when like no one can raise, right? Now, if you did do a revenue multiple, right, 17 million, right, on a $250,000 company, it's a 68x multiple, which isn't, I mean, again, I wouldn't
Right.
say that that's important. What's important is a story you're telling. So, but point being, there's a lot of people listening that are at your stage that are trying to raise this kind of round. How did you get it done?
I think it was kind of what you just said, right? I mean, people aren't investing in my multiple right now. They're investing in the company. They're investing in the vision. They're investing in Jonathan, and where we are, right? We have traction. So we were able to leverage our traction. We were able to leverage the space that we're in, and we've kind of created a marketplace. So I would say some of my advice is, again, we've been successful by staying, 2 inches wide and 2 miles deep, right? So we're not saying that we're property management simplified. Like, we have a very specific goal with the company. And so with that story and that transparency, it resonates with our investors and shareholders. It also resonates with our buyers, right? Like, they get that we are purpose built. So when it comes to when we start to look inside the numbers, I've been able to raise capital because we have over a 90% retention rate for paying clients, right? We have some issues prior to that on activation that are things that we can solve for, but from a raise perspective, we started this raise on September 6th. Mm-hmm. And it's been, and then the market kind of turns down, and we just stayed honest, and we just, stuck to what it is that we do, what we know. And ultimately, we've had success raising capital, Nathan.
Yeah, no, it's good. I mean, it is interesting to compare though. I mean, I believe I remember when we chatted in 2021, you said you turned down a $20 million acquisition offer, right?
Yep.
So you're now raising at a valuation that's equal to or slightly below that, right? How do you think about that?
I don't. I think that I look.
Should you have sold for 20 million?
No. I mean, I see this company being much more valuable than $20 million, and I was not in a position.
But then why are you raising right now at a 17 million valuation if you think it's gonna be worth way more?
Just because that was what I was able to get, right? So, I mean, working with some of our primary investors and myself, I mean, we felt like that was an appropriate number that we were able to get kind of that first initial 1.5 through a primary investor of ours. So that was just where we ended up with this deal.
Fair enough. Okay, very cool. So 65 customers doing 20,000 a month in revenue. So they're each paying about $300 per month on average. Do you have any of the 65 customers that are paying, $1,000 per month or $2,000 per month? Like, what are the big customers? What are they paying you for?
Yeah. So our largest client is about 7,000 of that a month.
Oh, wow.
And then And so with where we are right now, we have a release coming out end of this month. So it's our 3.5. 3.0 is our April release. So now we're on our fifth release since our primary. And with that, we're reaching a maturity level on our platform of a 3 out of 5. And with that, what that means for us is that why have people come and we have like a 52% close win? Why isn't it higher? Because we're missing feature functionality. We got something out there, right? So I think the story in SaaS, it's always just put yourself out there, right? Get a product out there, get feedback.
But what's the 7K customer paying for? I want to know that. Are they paying for more seats? Is there a specific feature you upgraded them against? Why are they paying so much more?
Property maintenance and project management feature sets. So we've opened. Yep, and they're a large B2B, so they see a state space. It's going to be fuel.
Large, they'll measure by what? Is it number of employees at their company, number of properties they manage directly? What's the utility number?
Yep. So they have about just under 200 employees. They're doing between $50 and $100 million in revenues annually, and they're managing over 100 properties.
So that's why they'll pay you 7K, because you charge per property, right? Or something like that.
Well, we charge we're just per user per month.
So it's against the 200 employees.
Yep.
I see. Yep. Okay. Interesting.
Yeah.
Very interesting.
State space isn't designed just for your company or the people that are in it. We are, like when we talk about an inclusive mindset, right? We've created a platform with very specific and very flexible roles and permissions to allow for our clients to involve their entire ecosystem. So we might have a family that has 15 properties, and each one of those properties has vendors that are helping them maintain it on a daily, weekly, monthly basis. Those individuals could be a vendor, it could be a member of their estate space, and they're actually communicating and tasking and doing all of those transactions with that vendor through estate space. So they're paying for that vendor to be someone that they're able to then securely manage and protect their interests.
Understood. Love the story, Jonathan. We're out of time, though. Let's wrap up here with the famous 5. Number 1, favorite book?
It would be the E-Myth Revisited.
You're consistent. That was your favorite 2 years ago as well. The revisited version. There you go. It's the updated one.
Revisited and Traction. Those were the 2 that kind of got me kicked off into becoming a serial entrepreneur here.
Number 2, is there a CEO you're following or studying?
Yeah, I mean, it's still going to be Bezos. It's still going to be Apple. Those are going to be my top 2 that I follow.
Number 3, what's your favorite online tool for building the business?
I mean, I'd say that, from a pure development perspective, we're using Atlassian. Do I love it? It works. We'll leave it at that.
Fair. Number 4, how many hours of sleep do you get every night?
7.
Okay. And what's your situation? Married, single, kids?
Happily married, 3 kids, 2 dogs, 4 birds, and a partridge in a pear tree.
That's amazing. What, you're 40 now? 41?
I just turned 40. Yeah.
Just turned 40. Yeah. Very cool. Last question. Something you wish you knew when you were 20?
To get good advice before starting a company. Find somebody that's already done it, right? That's what I always wish I would have known, that it took me about 18 years in business to actually learn that one. So that's always my number 1 advice.
Guys, family offices pay estate space to manage hundreds of properties. He charges per seat. His biggest customer pays $7,000 a month. He's up to $20,000 a month in total revenue, or $250,000 run rate. Just closed a 3.2 million seed round at a 17 million pre-money valuation. But it's really because of the traction he had before that with his agency, doing millions and millions a year in revenue, doing custom solutions for the same customers he's now serving today. That's why he's now scaling so quickly, and that's what allowed him to get the seed round done in a market that's crazy, where no one can get deals done. Team of 17 as he looks to scale. New version coming out here shortly. Jonathan, thanks for taking us to the top.
Thanks, Nathan. Appreciate it. See you soon.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company, or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them, and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.